This is Rod Kusin, Spooman for Risk for Friday, November 12th, 2010. All times on the charts to come will be Central Standard Time. We're going to start off today's video with something kind of fun. We are, of course, promoting our new RSK premium strategy. It has three primary settings. One is referred to as the pivot setting. One is the divergence setting, and another is the trend setting. And the divergence and the pivot setting are all designed to capture primary moves in the market, overbought, oversold conditions. And if we happen to not get in on a major pivot, then we look for the trend and trade with the trend. We've created a variety of different settings in each of these strategies, and I just thought I would just show you the equity curve from all of the strategies that we had running today with slightly different settings. Okay, so we're going to start off with this particular one, 24 trades, 90 trades, but that's not too bad, almost $9,000. That's pretty good. 13 trades, 1,400. 25 trades, about $3,000. No trades there. And 6 trades there. And another 6 trades on that one. About 45 trades there. Little dip at the beginning. No trades there. Just a couple trades on that strategy. Nothing there. Three trades here. No trades there. And then for our last one, quite a few trades on that. Okay, so that's what we produced. My point in showing you this is that while granted there's a variety of different ways to set up our strategy, the point is I think we've really nailed down settings that consistently work. Even if you don't nail it as well as you would like to, the different varieties of ways that you can set this up are still consistently profitable. So let's just take a look at a couple of the couple of the charts. We're going to look at a pivot strategy, and then we're going to look at the trend strategy, because today was really a trending day, wouldn't you say? So let's do that now. Okay, we're going to look at the trend strategy to begin with, but I want to show you what I saw when I came to the trading desk this morning. I looked at the chart and I noticed this fairly robust rally that took place in the overnight market. Now, of course, it had dropped off considerably in the after hours yesterday, but then she rallies up. But look what it left behind. I've got all of these retracements below the market. I've got nothing above the market. Nothing. So what does that tell me? It tells me that this market is going down. Why? Because our retracement lines are so accurate. 85% is the worst record we've ever had. 85% accuracy. And today winds up being 96% accurate. Wow. So that's, of course, in retrospect, but having such a high probability with our retracements, it was really a slam dunk that we wanted to be shorting this market. Nevertheless, the first trades we get using the system, the trend system, was a long trade. Now, we set this up as a swing trading arrangement. I probably shouldn't have done that. But in any event, that's the way it played out, because as the market rallied up here, knowing full well this market is going to short, swing trading this didn't make any sense. But in any case, that's the way the strategy was set up. So we move into this first short trade, and that's kind of a bad trade, as you can see, because for whatever reason, maybe somebody jumped in with a whole heck of a lot of contracts after 9 o'clock, and I mean, that was weird. That was just weird. Look at that jump. The market moves, from 12:05 up to, 12:08 in a minute. So I don't know, fat finger syndrome or something like that. In any case, now we can see how this system is supposed to work. When the market moves up, the strategy is looking at the premium, all right? And when I say move up, when it moves up a little bit, all right, we're watching the premium. And if the premium exceeds certain thresholds, we automatically take a trade. And here's how it looked. Okay? And then all of these trades hit their profit target. So let's look at the settings here. I said it was a swing trading. What I meant by that is that we were trading in both directions. But we did have a profit target, and it was only 8 ticks. 8 ticks per trade. But here's the settings. And these are interesting settings. We hadn't used this approach before, but in continuing to work with the trend, we're just tweaking this a little bit. Here's the trend setting. We just turned that on, and we used a series of 45, 10, and 3 tick intervals on the large contract for determining the trend, and wanting to make sure that we're trading with it at all times. So there you have it. Boom, boom, boom. Nice trades pretty much right after the high, and beyond that, not much happened. Then mid-morning, we had a brief change in direction, and we got this buy. It moved up nicely from just under, just about 11.99 up to 12:01.75. But we didn't get any short trade in there because, again, this is a trend system. So we didn't make our 8 ticks quite out of that particular trade, but plenty of time to take action to make sure you didn't lose anything. After all, you've got a retracement line below the market. You know what's liable to happen there. So I'm not going to call that a losing trade, even though it's, the next trade was short. So this brings us down into noon. We don't quite get our 8 ticks out of that. We get a little volatility here. We get a losing trade there based on the swing. And then as we get into noon, now we start to fire off a long trade. And basically, that was it. Okay, now we're into the last few minutes of the day, so we can pretty much call that the end of the day. Point of the matter is, yeah, it works nicely. It works nicely. Just trade with the trend. It's one of the safest ways to trade. All right. Now, let me back up. I came down here and I said the profit target was 8 ticks. Pardon me. That was not the profit target. That was another setting. Our profit target was 20 ticks. 20 ticks. Okay. All right, so there was the equity curve for that trend strategy. Okay, now let's take a look at another strategy. We're going to look at the a divergence strategy. We had this filtered by the tick of the U.S. exchanges. That's the volume filter. Then we have our divergence setting, and we're using an SBC 10 with a OBOS of 20 and 80, and then an SBC 3 that's a little bit tighter, 1090 on slow K and 2080 on slow D. And that produced much fewer trades, but oddly enough, it mostly traded long. We had no trades until that first dip occurs at around 938 here. That hits its profit target. We get a few more trades, a little bit of a drawdown. All those hit their profit target going into 1030. Then we had that secondary drawdown, secondary short, and we get this long trade here. Now that has a bit of a drawdown itself, but ultimately it hits its profit target, and we don't get any of the sell signals until the afternoon. And it hits its profit target as well. That was it. Not a lot of trades, but the trades performed. It was good. Let's see if we've got one more that we have time to show you. Okay, here's our pivot strategy. Settings on this. Here's the 3 settings. That makes the pivot strategy. Now we had somewhat loose settings here. Overbought, oversold at 25.75. I think a little bit tighter than that makes more sense. But what we added on this occasion was a stochastic using a 3000 ES tick as well. And that produced our first short trade, again, right before that big move up. But ultimately, we wanted to be trading short anyway. Nevertheless, the long trades start popping up. And it's picking off these long trades up to their profit target. Now these get stopped out. But here we make the profit target. Here we make the profit target. A little bit of a drawdown here, but all these make their profit target. Then we start getting more long trades as we're just about done with the move down. And they ultimately make their profit target. Now, I want to comment about these trades. Now, we did not have on this strategy this setting here. This setting limits trades that are too close to existing retracement points. Now, we didn't have that turned on. But had we had it turned on, you would have noticed that the only trade that would have fired off here, okay, none of these long trades would have fired off. None of them, if we would have had that turned on. And it would have made good sense to turn it on under the circumstances because there were just so many retracements below the market. Had we done that, the only trade we would have gotten would have been right here. That would have been the only trade because there were none others. All the rest were too close to their profit targets. Pardon me, long day, too close to the retracement lines. But that's what that filter is all about, to prevent you from trading when you're too close to a retracement. It really doesn't make a lot of sense because of the probability that you're going to hit them anyway. So, in any case, that's how it turned out. And it wasn't a bad day. If we just let the thing run, that was a strategy performance report. Okay, so that brings us to the end of this video. We invite you to come to our website, take a demo, take a ride. This is a bang-up strategy. It's got a lot of potential, a lot of features to it that are well worth examining. So go to our website. We're getting around to updating the website. and you'll be able to learn some more things there. But we're out of time, and this is Rod Kusin and Spooman for Risk.